Recently, the stock market set another all-time high, and Micron Technology played a large role in the market's strength. On Thursday of last week, Micron Technology reported earnings, and on Friday, shares of the chipmaker opened down sharply. So is it time to buy Micron? Let's take a look. According to a recent article from Investor Place, and I'll simply read to you from the article, Micron beat both on the top and bottom lines, so the knee-jerk reaction from traders was to spike Micron stock. Micron then reversed course during the conference call as management committed the cardinal sin of guiding lower. Micron raised concerns over gross margin pressures, so the current quarter metrics quickly flipped to being worries about the company's direction. The consensus is now that it is a value trap, and according to the author, therein lies the opportunity. Fundamentally, Micron already trades at a low PE ratio, so it's already shed a lot of froth. There is nothing but bone, which makes the downside risk minimal. Experts are worried that NAND and DRAM prices are falling, but so many experts say it is already priced into the stock. So the author is confident that he will profit from owning the shares, especially if at a deep discount. The fact that investors bought the earnings headline at first tells the author that most agree and are looking for reasons to buy. So with time, their fears will abate once more and the selling will stop. Management guided lower because they weren't just hit with Trump's new $200 billion tariff, so they have to note it is a worry. This is a good management, not a reason to flee the stock. Hedging cost pressures from extraneous circumstances reveal a heads-up management style, which is a team the author can bet on. And let's not forget, we still have a favorable macroeconomic environment for growth. The trade war with China is real, but the author believes that the U.S. and China will come to an agreement in the next few months. Both sides have too much at stake to let it linger past December. So the author wants to profit from what others are fearing. This is a rinse and repeat trade for the author that he's shared several times before. Micron stock has little froth to shed, so the downside is finite. However, the author continues, technically, Micron stock has a support band around $40 per share, so it's likely to hold here, but if it fails, it could ignite a second wave of selling for another $5 lower from here. Also, experts on Wall Street are confused as their price ranges are wild, yet analysts are largely optimistic, and Micron stock is selling well below their estimates. This raises the risk of further analyst downgrades. So let's take a look at the chart. So here we have the 20-year monthly chart on Micron Technology, and the symbol is MU. And for a history perspective, this is the top right before the dot-com bubble. Down here is the top before the great financial crisis, the bottom here in early 2009, with then the most recent few years, a top here in late 2014, a bottom in 2016, moving to a top here in 2018 with the current price heading on down. We're just hovering above the 20 EMA. Moving into the MACD, we can see that this sort of formation, in my humble opinion, is a topping process in Micron, not unlike this topping process here. This back right before the dot-com bubble is a little bit extreme in comparison, but perhaps another reference. The fast line right here is moving just through the slow line, and it appears to me that stock market gravity has taken hold, and I think the stock is going to continue on down like that. We see that in the histogram. We're about to go through zero here. It looks like the price rate of change has already done so, heading down. It's going to go through the zero line, I would believe. Moving on down here into the RSI, we're just at about the 50-year midline. Looks like it's going to continue on there, as well as in the stochastics heading on down. Volume looks to be slightly heavy recently, at least through 2018. And at least on the downside, that's not necessarily a good sign. It's not too bad, but it's not necessarily a good sign. Williams looks like it's heading on down. No sign of a bottom. So I think overall I'm going to disagree with the author. At least to me, this looks like perhaps things might improve for Micron, but for now, I think that the pendulum has swung and it's heading to the downside. In my opinion, it's going to take some time before it slows down. The price slows down in its descent, and only then will it have the opportunity to bottom. But I don't see any signs yet of a bottoming process in Micron, so I would stay away in my humble opinion. So for ChewDog Charts, thank you.